There was a lot of excitement about this, and that excitement seemed to really take off even as the stock started trading. It priced at 78. It jumped out of the gate at something like $109, increase of more than 50%. Do you like this stock here? What do you think about the valuation? Why so much excitement?
Becky, maybe for a starting point, I'm a huge fan of EVs and the EV opportunity. I think Rivian's valuation is a full standard deviation outside of aggressive. I want to quickly put that into perspective, is that their vehicles sell for an ASP of $80,000. That's similar to Tesla's Model S and X $80,000 ASP. And those units on an annual basis have essentially topped out at 70,000 vehicles a year. If you apply a 70,000 vehicle delivery number for 2023, keep in mind there'll be about 1,000 vehicles in 2021. So if you ramp from 1 to 70,000, which is a pretty sizable ramp in 2023, that means that I didn't do the math with the up 9% in the pre-market, but that means that the valuation per vehicle delivery in 2023 is $1.3 million. Tesla, excluding all of their energy business and insurance and other X factors, is valued 2023 at about $500,000. So when you put this together, this is trading at about 2.5 times Tesla's valuation, and does not have what I think is some of the other X factor upside around autonomy. It's not as strong with Rivian, also the energy business, insurance, for example. So it does beg a question of why is this happening to Rivian stock, and can it continue?
Gene, when you lay it out like that, I don't know that I've ever heard somebody lay out the vehicle. Like for Tesla alone, you say $500,000 per every vehicle that it's going to deliver next year. That seems crazy. Can you justify that before you even get to this valuation for Rivian?
Well, this is my opinion, is that you have to look at what the underlying growth rate is. And I think over the next 5 years, Tesla can grow at 50%. If you apply a 6.5 multiple on that 50%, that's the same multiple that Apple would get for its hardware, software, and services. Ultimately, I am in the camp, I think this can be a religious argument here, but the camp that EVs are ultimately computers on wheels, and this is a tech company, Tesla and Rivian for that matter. So when I think about Tesla and think about the long term, my opinion is this can be a $2,500 stock. But there is an important difference here with Tesla and Rivian, is that, as I mentioned, the average selling price, they start at 70,000, Rivian's vehicles, but their ASPs are going to be ultimately 80,000. Is that Tesla didn't get to that 50% growth number until they started to sell vehicles in the $45,000 part. And so undoubtedly, Rivian will have more vehicles in that. But I think that to answer your question on Tesla, I still believe that that 500,000 is justified given the size of the market opportunity. And in Rivian's case, it's a head scratcher for me. Not anything's possible in tech. Again, we can talk about why it's going so high, but I feel I'm uncomfortable at what these valuations are.
Kathy Wood, too, who has been obviously a big proponent, a big bull when it comes to Tesla, has said similar things. She said she wouldn't have bought it at the price that it priced at $78, even before the jump you saw when it started selling. That's unusual. Now, to see all of these questions that are raised around this, I guess if you had to take the other side of this, people would say it's big backers. It's got Ford behind it. It's got Amazon behind it, and Amazon's going to be ordering a lot of their trucks. And maybe that's the instant partner, that if they're willing to put their stake behind it, that there's something there. That, you know, they've only delivered 156 trucks. Most of those have gone to employees, almost all of them. For 2023, they even said in their own prospectus that they don't expect to fill the 55,400 orders that they already have till the end of next year. So you are talking about, or the end of 2023, I should say, you are talking about a long runway with some of these things. But people look at this and they look at the backers and they say, okay, there's promise behind it. Or do you think that this is a case where retail investors have jumped in and thrown even crazy valuations out?
I think there's two factors to this. I think one side is institutions were there from the beginning at this $50, $60 billion valuation. And the reason why they participated in Rivian versus all these many other EV companies, most of them SPACs, is that, as you said, institutional quality. You talked about their investors. Ford, Amazon, but that gives big companies like T. Rowe comfort that this, in fact, is going to be around for a long time. And then you throw in the X factor, which is the fear of missing out, the fear of missing the next Tesla. And there's some very loose math that I think goes on in some investors' minds that if this is a truly institutional quality and the potential to be the next Tesla, Tesla is a $1 billion market cap, therefore Rivian needs to be a 10x from current levels. There's probably some loose math around that. I don't think it's sustainable. I think Rivian is going to be a key player in the market, but that to me tries to make some sense about what is going on with the valuation of Rivian.
Gene, thanks for breaking down the math with us this morning. It's good to see you.
Thank you.